the Federal Reserve had cut interest rates by about 3 times. This time we'll be watching out whether or not there will be further rate cuts, given that the inflation has already remained quite benign in the US. But yes, the third factor being is that the US Senate has advanced a proposal that aims to limit the power of US President Donald Trump's ability to use further military action in Venezuela. So this is an important, advancement and resolution that we'll be watching out for, and whether or not Senate actually goes through with it. But yes, fourth is your Marco Rubio, who is the US Secretary of the State, has also said that the US and Denmark would discuss indeed about Greenland next week. Now, what he said is that it won't be a military action, but rather a purchase agreement for Greenland. But, all of the European leaders so far, they have dissented to this move, and they've said that any of the US action in Greenland would mean an end of NATO. And so far, they have criticized any moves which has been thought out by the US itself. But yes, plenty of global headlines that we have seen, and we'll understand, how all of these cues will further shape, and how all of the political tensions, geopolitical tensions, the economic data will add up to the markets itself. But for our own markets, we will also be having the December quarter results, which will be starting from next week. The 12th of January is when HCL Tech and TCS will be first reporting their third quarter results, and then it will be followed by the rest of the India Inc. So yes, we'll understand, how your trade position should be at a time like this. We'll also understand and talk to experts where the markets are headed. So don't forget to drop in your stock-related queries, and we'll address them in a bit. But let's move on and take a quick check of the top headlines, Sisa. Stocks on Wall Street end mixed, with Dow Jones ending 270 points higher, while Nasdaq moves lower as investors rotate out of tech stocks. Asia markets start mixed as investors assess China's inflation data. Meanwhile, the GIFT Nifty is indicating a sluggish start for our own markets. Crude oil prices rebound as market reassesses supply risks against US physical balances. Gold prices remain steady as market eyes US jobs data, index readjustments. The US Senate has advanced a resolution to limit President Donald Trump's ability to conduct further attacks after the Venezuela raid. Democrats and five Republicans have voted to advance the war power resolution on 57-42 votes, 52-47 vote, and ensure a vote next week on final passage. All eyes today are on US Supreme Court as it is expected to rule on the legality of Trump's tariffs. The administration will have to issue full refunds if the Supreme Court rules against the tariffs. And in the primary markets today, Coal India's arm Bharat Coking Coal opens for subscription, the first main board IPO of 2026. The price band is set between 21 to 23 rupees a piece, and the company has already raised about 273 crore rupees from anchor investors. Of course, it was a deep sell-off yesterday because across the board it was red for the Nifty 50 and of course for the Sensex itself. But yes, Nifty continues the fall to about the fourth consecutive trading session, and so far this week Nifty has already declined by about 2% itself. And with that, Nifty has also slipped below some key technical supports level. It's broken below that 20 DMA and 50 DMA moving averages itself. It's near that 26,000 levels, and it has seen the biggest single day fall since the month of August. But yes, yesterday we also saw over 8 lakh crore rupees of investor wealth getting wiped out in a single session. And as I was talking about that, the selling has been broad-based given that all of the sectoral indices ended in the red. Among sectors, it was the metals that led the losses given the sector has seen a sharp rally, and the bank Nifty also came under the pressure. But yes, the heavyweights and the large caps continue to lead the declines because we did see Reliance Industries, HDFC Bank and IT majors drag the benchmark. But right now, the trade uncertainty weighs with given that the US has considered a certain proposal of about imposing 500% tariffs on any country that continues to buy the Russian crude oil, and as a result of which we did see that some of the export-oriented names, be it your textile stocks or even the shrimp stocks, took a hit yesterday. So yes, this was how the market setup looked like yesterday, but we'll watch out how the trading action shapes up in today's trading session. Of course, given the kind of consolidation we have seen in the past for trading session, we'll watch out if there is indeed a respite or a breather today. But yes, coming to the cash flows position of where we stand, FIIs, they were the net sellers yesterday with about 2,500 crore rupees selling in the cash markets. DIIs FIIs providing some relief by buying stocks which was worth about nearly 3,000 crore rupees in the cash markets. But yes, Nifty put call ratio that has dropped to about 0.66 levels from 0.89 levels in the previous session. Remember that we did start this week by about 1.5 PCR ratio, and round we have actually slipped to about 0.66. So this actually indicates that whether or not we can see some consolidation and a rebound from these levels as of now. But yes, the stocks that continue to be a part of the F&O ban, that's your SAIL and Sammaan Capital, and none of the stocks have been removed as of now. But yes, if you take a look at the pre-open rates, that clearly points out that we could be headed for a weakish start as of now. Sensex down by about 150 points. Nifty continues to slip below that 25,900 odd levels at the pre-open trade. But let's quickly get on board with a technical expert of this show to understand how your trade position should be like. Joining me is Amar Singh of Angel One. Amar, good morning. I mean, Nifty clearly slipped below key technical support levels yesterday. India VIX is bumped up. What levels can we watch from here on?
Very good morning. See, what we are seeing is that the benchmark indices, definitely we've seen a sell-off from the recent all-time highs, and they've been in the sell mode for, I would say, last few trading sessions. Yesterday was definitely a sharper sell-off. So more on the back of, I would say, two factors. One, as you rightly said, the Trump tariffs. That's one. Secondly, ahead of the quarterly earnings also, so there's some lightening of positions which is happening. And third, I would definitely like to add is that we're not seeing FII inflows. So that's one area which can definitely, if that starts to come back, we could, and on a consistent basis, we could see higher on the upside. If you look at the benchmark index, Nifty in specific, see some of the technical indicators on the medium term, long term, they continue to remain positive. But some of the shorter term indicators have turned, I would say, not very negative, but yes, they're clearly indicating consolidation. So on the downside, Nifty has got first crucial support somewhere around the 25,800 levels. So 25,700 levels. So 25,650, 700, that's a very important zone of support for Nifty. If that is taken up, then we could be headed towards 25,500, which would be the next major zone of support. As far as on the upside, what's happening is that any pullback is being used more of an exit opportunity or a shorting opportunity in the index per se. So on the upside, 26,100, 26,200, that's the upside that seems to be capped. And yes, a short-term top definitely seems to have been formed in the markets as far as Nifty is concerned.
Okay. Amar, what about the Bank Nifty? I mean, yesterday it also came under selling pressure, and it still remains below that 60,000 level. So from a technical perspective, how does the Bank Nifty looks like going ahead?
See, Bank Nifty is anytime better placed as compared to Nifty, no doubt about it. And that is reflected in the value of Bank Nifty as well. So Bank Nifty has marginally corrected, but still overall the trend is positive. Yes. Now it's going to be very important as to how some of the private sector banks, large private sector banks like HDFC, Axis, ICICI, they perform, and how their price moves behaves in the market. So that's going to be something of interest to watch out for, because the PSU banks have led the charge earlier, so which really helped the Bank Nifty apart from some of the other stocks in the private sector bank. So I would say Bank Nifty is better placed, no doubt, as far as Bank Nifty is concerned. If I look at crucial support zones for Bank Nifty, so that's somewhere around the 58,700, 59,000 zones. So it's not very far off, 500, 700 points below where we have major support for Bank Nifty. Whereas on the upside resistance, if I look at the resistance, so resistance is around the 60,000, 400, 500 zone. So it's more of a move in this with a positive bias in Bank Nifty. So if I were to look at Nifty and Bank Nifty is anytime better placed.
Okay. But how does that make you feel about HDFC Bank? Because so far this week we've already seen that the index major has fallen by about 5% itself. Going ahead, can we see further fall, or can there be certain consolidation and a rebound, so to say?
See, if you look at HDFC has been really struggling. So if we go back in time and see for the last almost 7-8 months, so the stock has not been able to hold on to its gains. So the 1,000 earlier it had made almost 1,017, 18 recently. Also the high was around 1,070. It's not able to sustain over the 1,000 level consistently. It's trying to breach that level, but it's not able to sustain. What we've seen is a very sharp correction from almost 1,000 to 950 or 945 odd levels. So if you ask me, this is yesterday's low is something which is very important. So I would say 930, 940. Currently it's around 945. Sustaining below 930, we could see it further crack. So further crack towards the 900 level. So that's the level to watch out for. I would be very careful at this 930, 940 zone, because if it bounces back, what's going to happen? It's going to be a temporary bounce back. It's not going to be a complete V-shaped recovery until unless we see something very spectacular on the results side. And some of the technical indicators from an intermediate term perspective, they also clearly point that it's more of consolidation for HDFC Bank, with 930 acting as a very strong and important level to watch out for.
All right, 930 levels is something that we need to watch out for HDFC Bank. But yes, just less than 10 seconds to go before we go to the open. But yes, I mean, coming to you, Amar, about the metal index, clearly taking a breather after days of consecutive rally that we have seen. What can we watch out from here, and anything that you're liking from the space?
See, metals, we've seen some sharp correction. Tata Steel is one stock one can keep a close watch on. It has moved up, and so now it has corrected. So it could be a buying opportunity somewhere around the 175 odd levels.
Okay, all right. Tata Steel is something that we need to watch. Yesterday also it came out with its Q3 production numbers. We'll watch out how Tata Steel behaves in today's trading session. But it has been a flat start for the markets, but indeed flat but with a positive bias for the Nifty 50. 20 points gain coming in for the benchmark index. But of course, whether or not this sustains is something that we'll be watching out for. So 25,800, that is where we are at as of now, 14 points gain. Sensex also seeing a mild startup with about 39 points gain. So it's a very quiet start for the markets. Given the kind of fall we have seen yesterday, there's a little bit of a rebound or a respite as of now. But you can see that the markets have been still on a fairly weakish note. But yes, coming to the broader end of the markets, let's take a look. Nifty midcap index has opened slightly in the green. If you look at the small cap index, that has also opened flat, but with a negative bias, so to say. So both the broader end of the markets are still trying to get terms to it. Small cap index particularly is seeing a decline of about 0.2%, so to say. I mean, the sectoral indices, Nifty IT is seeing gains of about 0.5%. On the other hand, Nifty Metal, as we were discussing, 0.2% gains coming in from there itself. PSU Banks, Pharma, all have opened in the green, but what is not doing well in this market is your FMCG. Nifty FMCG is seeing a decline of about 0.1%. Nifty Media Index with about 0.6% decline. Nifty Realty Index also seeing a decline of about 0.4%. Now, let's take a quick check of how the large caps look like on the Nifty 50 front, because yesterday it was just 5 stocks in the green that got settled, and 45 of the Nifty 50 stocks were settled in the red. But if you take a look at today, the picture seems to be a bit better. You can see ONGC seeing a gain of about 1%. Bharat Electronics once again doing well on the back of the order win. 1.5% gains coming in from there. Power Grid also doing well. Asian Paints, HCL Tech, Infosys, some of the other gainers on the Nifty 50. Let's take a look at the losers. ICICI Bank seeing a little bit of a breather, given that yesterday it was still holding in the green. 1% decline coming in for the lender. Adani Ports also seeing a decline of about 0.7%. NTPC nearly 0.5% decline. Apollo Hospitals, Trent continues to fall. Ultratech Cement also remains one of the top Nifty 50 losers as of now. But yes, IT stocks once again seeing a little bit of a buying interest before we have the Q3 results, which will be starting from next week onwards. Amar, let's get your view for IT pack. Of course, we have seen a little bit of a volatile moves which has come in the sector. But in the past 3 months, still, we have seen that the Nifty IT index has still managed to see some participation. What's your view, and what can we watch out ahead of this Q3 earnings season?
That's more or less consolidation right now, what you're witnessing post the rally, because it did correct from almost 39,000 plus levels to currently around 38,100 or so. So it's more of consolidation as far as the Nifty IT index is concerned. If I look at the specific stocks in the Nifty IT is HCL Tech is now showing some signs of positive momentum. It has bounced back, so sustaining around the 1650, 1660 levels. It could rally towards 1700, 1720. So we'll have to watch out for the results. As far as Infosys is concerned, again, more or less some sort of consolidation witnessed there as well. And if I look at the other stocks like Persistent, is trying to consolidate. So it's not able to breach the 6500 level consistently. It's around the 6400 level. So it's more of consolidation. But yes, any dip towards 6200 odd levels is a buying opportunity in Persistent. But most of the IT stocks, I would say, are clearly indicating that they could witness some sort of consolidation. And TCS is also, till the time it doesn't hold over the 3300 level, it's not going to witness any significant rally.
Okay, all right. That's the view coming in from the IT pack, and we'll be watching out how the results season pans out for the IT basket itself. But yes, let's talk about one of the top Nifty gainers today. That's your Bharat Electronics. We've seen additional order worth of 596 crore rupees, which has boosted the overall order book for Bharat Electronics, and the stock has been up by about 2% as of now, and even in the past 1 month, the stock has done well. Amar, how do you see this going ahead? Can the trend sustain, and what are the levels that we need to watch out from here?
See, as far as Bharat Electronics is concerned, the overall longer term trend definitely remains positive for this. We've seen some consolidation, the stock correct from almost the 420, 420, 430 levels to as a recent low of 380. And then it has bounced back towards 420, 430, 420, 425 odd levels. So I would say that it is inching towards its a crucial zone. So somewhere around 430, 440 is a zone of resistance for the stock because that was where the all-time high was. That was around the 436 odd level. So I would say that overall the trend is positive. So the structure is also positive from a buying perspective. If you look at the volumes, that also has been significant over the last few trading sessions on specific days. So this is one stock one can look at on the buying side, but immediate resistance, as I said, 430, 440. That's the level to watch out for. If it takes that out, sustains over that level, then we could witness a sharp rally in the stock towards the 475, 480 levels. On the downside, it's very strongly supported around the 390, 400 levels.
Okay, all right. 394 levels as the support zone for Bharat Electronics as of now. But yes, let's take some of the viewer queries that is getting dropped on our live screen. We have the first query, which is coming from Anil. He's asking that he's been holding 200 shares of EMS at about 729 rupees. That's what the buying price has been. But he's seeing a bit of a loss as of now, and he's asking whether to average or sell at the current price point. Amar, what your advice would be? I mean, the stock has been on a negative trajectory. 729 was his buying price, and right now the stock is at about 400 odd levels.
So see, if you look at the stock first from a technical perspective, so the stock has been in I would say, in a bear trend, and that has been since December of 2024. From that onwards, where it had made a high of almost 1,000, 1,016. It has been correcting month on month and made a recent low of 400, 396. Currently, it's around 400 odd levels. Overall, the trend remains negative for the stock, but it's around crucial support zone. So somewhere around the if you ask me, somewhere around the 370, 380, that's a important zone of support where it could witness some bounce back. But its earnings also, if you look at from a fundamental perspective, its September quarter results were very disappointing as compared to its previous June quarter results. So I think that also, and overall, it has not been able to display strong growth in those numbers. So I think that's what is being reflected in the price. So from the current levels, if it's able to sustain at the current levels and witness some bounce back towards 430, 440 levels, then you can say that the trend has changed. One important level to watch out for on the stock for any significant signal of trend change is 452. So if it sustains above 450, then you can say that the trend has changed. But from a shorter term perspective, longer term on the upside, it will meet with selling pressure somewhere around the 480, 500 levels. So one needs to wait and watch out how the quarterly results come out for this December quarter.
Okay, all right. 450 levels is the key level that we need to watch out for EMS as a sustenance level going ahead. All right, let's move on and take another viewer query. We have Naveen who's been asking the view on IEX on how this particular stock looks like. Of course, we've seen that the stock recently saw a breakout itself on the likely withdrawal of the market coupling norms. But yes, Amar, coming to you, I mean, we do have the Electricity Appellate Tribunal, which will be meeting today to hear the next round of discussions on the market coupling case. I mean, how are you placed here? I mean, the stock did recently well. What can we watch out next?
Yeah. So I would say that the stock is in particular more driven as of the news. So that's where the stock, and earlier also the correction which the stock had witnessed was primarily on the back of the news, same news, so which is being heard as of now. So I would say that the stock seems to have formed a base, but it's going to be very news specific as of now. So on the upside, the stock has got some resistance around the 162 odd levels where it could meet with some pressure. Sustaining of that level, then we could witness a sharp rally. But yes, the stock seems to have formed a strong base. So until unless we see something very negative come out, the stock is most unlikely to breach its recent lows of 130, 132.
Okay, got it, got it. All right, I mean, let's take a quick check of the markets of where we are headed right now. If you look at the Nifty, it's flat, but with a positive bias, but it looks like a very quiet day for the markets. If you look at the Nifty 50 index, still above that 25,880 mark as of now. But yes, you know, it's a very flattish kind of markets as of now. If you look at the Nifty midcap index, however, it's seeing some signs of recovery. 0.1% gains coming in from the mid-cap index, but the small caps continues to be the major laggard as of now because it's seeing a loss of about nearly 0.5% itself. So small caps have been under the pressure, and of course the broader end of the markets have been quite volatile so far this week, given that earlier they were helping in the initial days, they were helping the markets to recover and trim its losses from the day's lower levels. But right now in the past two trading sessions, we have seen that the broader end of the markets have also been contributing to the sell-off of the markets itself. But yes, let's take a look at India Wix, how it has been doing. 0.3% gains coming in for the India Wix as of now. It still remains near to the levels of about 11. So we did start the week with about sub 10 levels, but right now it's nearing that nearly 11 odd levels as of now. So yes, you know, we can be seeing that the markets have been pricing in certain panic and nervousness ahead of the December quarter earnings. But yes, let's take a look at how the sectoral picture has been panning out, because so far the picture has been quite mixed. If you look at the Nifty IT index, 0.5% gains coming in there ahead of some of the results which will be rolling out as well. On the other hand, Nifty Metal Index has inched up into the green, 0.1% gains coming in there. And the PSU Banks continues to hold well with about 0.4% gains. But let's move on and talk about one particular stock in focus. That's your RVNL. The stock has been quite flat today, but we did see that the company has secured 201 crore rupees worth of order from East Coast Railway. Amar, the stock did see a recent breakout, but gains have fizzled out. So what is the trend that we can watch out from RVNL?
If you look at the stock, honestly, if you ask me, it has been extremely volatile in the month of December because it had made a low of almost 301 on 8th of December, and from there it had rallied towards almost 400 levels. So on 29 December, so it has been extremely volatile. So almost 30% move in a single month, and then again, if you look at almost 20% correction from the highs. So that clearly says that something is definitely happening in the particular stock and which is being witnessed. So it's more of a tussle between the bulls and the bears. If you ask me as to the structure of the stock, it's more of consolidation because shorter term indicators are positive. Longer term indicators are clearly indicating more of consolidation. So I would say if it doesn't reach the 330 level and starts moving above the 350 level, then we could say that now again it's likely to witness an up move towards its recent highs. Otherwise, if it starts trading below 330 level, then it could witness a sharp correction.
Okay, all right. That's the view coming in for RVNL. But let's take another viewer query that is dropped on our live screen. We have Nadeem, who's been asking the view on Uniparts India, and he's saying that his buying price has been at about 530 odd levels, and he's asking whether or not to hold or sell at the current price point? Of course, he's seeing a bit of the loss. The stock recently has fizzled out, and of course, we can see in the past 1 month itself, the stock has been down by about 10%. In fact, in just the last 2 days, the stock has seen a subdued performance, and it's seen a breakdown of about 10% itself. Amar, coming to you for Uniparts, what's your recommendation going ahead for this particular counter?
See, again, this stock really, if you see for the last a few weeks, precisely around 8 to 10 weeks, the stock has been trading in a range anywhere between 400 and 500. Earlier, the stock had corrected significantly, made a low of almost 296, and then bounced back towards 500, 540 odd levels. So we are seeing some sort of correction in the stock. More or less, it's clearly into consolidation zone. As long as it doesn't breach the 400, 420 odd levels, I don't see much of a concern there. But for any significant upside rally, the stock needs to sustain above the 470, 480 levels, because the stock, since the beginning, has been correcting from almost the 650 odd levels. So the level to watch out for is 400, 420 on the downside, and on the upside 470, 480. As far as the trend is concerned, the trend, I would say, is more or less mixed in this particular stock.
All right, mixed trend for Uniparts as of now. All right, let's move on and take another viewer query. We have Anil, who's been asking the view on Bharti Airtel and how does the stock looks like, and what is the entry level we can watch out for this telecom operator. Amar, coming to you. Of course, we've seen a spectacular rally in the stock, but so far this year, the stock has seen a little bit of a subdued performance. It's declined by about 2%.
Yeah, so if you look at, see, Bharati Airtel, what we are seeing is that overall, though the long-term trend remains intact, what we are seeing on the shorter-term trends is that there is some loss of momentum, and which is being reflected in the price movement also. So the stock recently in November, towards this third week of November, had made a high of almost 2170, 2180 levels, and from there it had corrected towards the 2050 again. Then it had bounced back towards the 2160, 65 odd levels. And again, it's so clearly shows that the steam or the momentum is lacking in the stock as of now. So, and some of the technical indicators from a shorter term perspective, they point towards more or less consolidation or maybe some sort of correction. Ideally, what is the level to watch out for? Somewhere around the 1980, 2000 is an important zone of support for the stock. If the stock comes around those levels and it's able to hold on those levels, then we could witness some upside. But currently, it seems that the stock is being capped between 2000 and 2200 on the upside. That's a narrow range for the stock, at least in the next coming weeks, till we see its earnings and anything that comes out of that, which could be either positive or negative.
All right, range of 2000 to 2200. That's the view for Bharti Airtel. But yes, today the stock has been flat, but with a positive bias. Let's move on and take another viewer query. We have Satya, who's been asking the view on KAC International and whether it's a good time to accumulate this particular counter. Amar, what's your view? The stock has been trending downwards. Past 5 days, the stock has already seen a decline of about over 7%.
See, the stock has been actually, if you see, the stock has been trying to form a bottom because the stock had made its highs in December of 2024. That was around 1300, 13 levels. And from there, it had corrected almost more than half. So it fell by more than 50% to make a low of 627 in April of 2025 last year. Then from there, it had bounced back to almost 940, 950 levels. Recently, it's again made a low of 668. So it's trying to form some sort of support. It's trying to form a bottom. But the fall over the last few days has been very sharp. So from almost, if you look at on 22nd of December, from almost 760 levels, the stock has corrected towards 690 odd levels. So I would say that one can hold on to if one has a position. The level to watch out for is 750, 760 on the upside. That's a major zone of resistance. On the downside, it's strongly supported around the 650, 660 level. So as long as that is not taken out, I don't see much of a worry. But if you ask me from how the stock looks on the longer term charts, it's clearly in for consolidation. So if there is a pullback or a rally, that rally is unlikely to sustain in the stock unless it starts sustaining of the 780, 800 levels.
Okay, all right. That's the view for KC International. But let's move on with another viewer query. We have Varsha Gujjar who's been asking the view on Canara Bank and whether she should book losses at the current price point. Amar, what's your view? Of course, the stock has been in a consolidation range right now, and it has been oscillating between that 150 to 154 odd levels. What's your view? What does the next trend look like for you?
I would say that if you're willing to hold from a longer term perspective, you can hold on to the stock. Yes, the stock has rallied and currently is displaying some sort of consolidation. But on the downside, the stock is very strongly supported around the 140, 145 odd levels. And upside, it's 160. So 140, 160, that's a range for Canara Bank with a positive bias.
Okay, all right. That's the view for Canara Bank. Good to hold from a long-term perspective. All right, let's move on and take another viewer query. We have Samir Nayak who's been asking the view on Siemens India and Siemens Energy. He's asking whether it's a good time to buy the current counter at the current level or wait for some more time at this point of time. Siemens Energy, what's your view? Amar, how does it look like on the charts?
See, it's been in a spectacular downtrend. The stock has corrected significantly from almost 3,600 levels. Currently, it's around the 2,400 odd level. If I go back and see, in the June quarter of last year, it had made a low of 2,500, 2,508. It's trading below that level. So ideally, I would suggest is that you should wait it out and wait for some consolidation. Ideally, the stock is looking at some sort of forming a bottom out, but that's not happening as of today. So what I would recommend that hold on to it. Don't enter at the current levels. On the downside, somewhere around 2,370, 2,400 is a level where the stock could find some support, and sustaining above the 2,600 or 2,450, 2,600 level only, then we could say that there is a trend change. It's very important that we should avoid catching a falling knife. So if the trend is very strong on the downside, you should either wait for some major consolidation before entering, because in such cases, the stock can continue to drift lower and lower for a longer period of time.
Okay, all right. That's the view for this particular counter. Let's move on to another viewer query. We have Shweta Naidu who's been asking the view on CG Power because she's bought the stock at about 684 rupees, and she's asking whether is there any chance to get my buy value soon, or should she shift to transformers and rectifiers? What's your view, Amar? I mean, the stock has already seen about 10% fall in the past 1 month.
Yeah, I would say CG Power, overall, if you ask me, the trend is continues to remain negative for the stock on the intermediate term perspective, shorter term perspective. Yesterday, though, the volumes were significantly higher, but it's retesting the volumes. It's retesting yesterday's low as well, and because some of the technical indicators are negative. So I would say that so at the current level, so somewhere around the 570 odd levels, 570, 580 is a zone of support. If one can hold on to that level, that should be fine. And if it's able to sustain over the 620, 640 level, then we could say that there is a trend change. Otherwise, the stock is in a downtrend currently.
Okay, all right, got it. That's the view for CG Power. But just one last question before we let you go, Amar. Any top picks that you want to highlight here before we head on to the earnings season?
So I would say we've been positive, as I said, on Ashok Leyland. So that's one stock one can keep a close watch on. It has been in a spectacular bull rally, and the biggest challenge is getting entry points. But this is one stock very strong technically on the longer term charts, intermediate term trend, and the momentum is also very strong. So this is one stock. Any pullback can be a buying opportunity for the stock. The stock has a potential to rally towards the 210, 215 odd levels, and the stock has got very strong support coming around the 170, 175 zone.
Okay, all right. That's the view, and those are the top picks at this hour. But with that, we have to let you go, Amar. But thank you so much for your time and joining us.
Thank you.
All right, let's take a quick check of the markets before we move on to our next guest of the show. Of course, it's been a flat day for the benchmark index. If you look at Sensex, down by about 145 points. Nifty has also remained down by about nearly 50 points itself, slipped below that 25,850 mark as of now. But yes, clearly the advanced decline ratio is seeing a a huge gap because declines have been weighing on the markets as of now. But yes, from the sectoral perspective, it's the Nifty IT index which has been trying to buck the trend. It's up by about 0.2%. But other than that, it's the PSU banks which is holding on to the green as of now. But yes, majority of the sectoral indices have slipped into the negative territory. The worst performing sector as of now is Nifty Realty Index, which is seeing a decline of about 0.2%, nearly 2% itself. Other than that, FMCG, banks, autos, you name it, everything has been in the negative trajectory as of now. So yes, the broad end of the markets also remain in the negative territory. If you look at the Nifty midcap index, that is also sulking in the trade. Small caps also seeing a larger cut of about nearly 1% itself. So all in all, it's once again a subdued trading session. So far this week, we've already seen that the benchmark index has been in the red. Today also, this picture looks like no different as of now. But to understand and talk more about markets, let's move on to our next guest of the show. We have Mayuresh Joshi, Director of Research at MarketSmithIndia.com, joining us. Mayuresh, good morning, and first of all, wishing you a very happy new year. But this week, the markets have been on a weakish side and tumultuous week because we have the geopolitical tensions, then we have the Trump's 500% tariff threats. How should one play this theme currently?
Morning, Lavisha. Morning, Lavisha. I think season's greetings and Happy New Year to you, the entire team at Moneycontrol. Wishing this year is a very healthy, peaceful, and a prosperous one. Obviously, geopolitics is dominating the markets as we speak. The Trump rhetoric of 500% tariffs on countries importing Russian oil, the military action taken in Venezuela, the threats issued to Mexico, Greenland, I think they are not helping risk asset classes like equities as we speak. And therefore, the kind of knee-jerk reaction that we have witnessed on the market, specifically over the last couple of days, I think seems to be bracing in on what Trump might probably do. And therefore, since it's a weekend, what happens over Saturday, Sunday is something that the markets would ideally watch out for, or otherwise as we head into the next week as well. So yeah, I think geopolitics is something that will dominate how equity markets fashion, at least from an immediate short-term perspective.
Okay, got it. I mean, we still have the US Supreme Court's ruling on tariff legality going ahead. But do you think that that's going to improve the sentiment? Because not just the tariff report, but we also have the US jobs data, which is due.
Oh, absolutely. I think the macro data points are probably going to also remain in focus. And the ruling is probably going to be important to a certain extent. But how can Trump circumvent that? I think he's found ways and means to probably do that. But I think the bigger threat now is a combination of both these factors, right? Apart from tariffs and the circumvention that he might do, what probably happens in terms of military actions that he's expected to take. And that probably remains one of the more fearful factors as we speak for the markets.
Okay, got it. Mayuresh, I mean, we have the third quarter results, which will be beginning from next week. So what are your growth projections from the December quarter?
I think it should be strong and stable. What you've probably seen as a precursor in Q2, it was an earnings surprise for some sectors, which probably outbeat the market in terms of earnings expectation. And therefore, with Q3 coming through, I think Q3 should be relatively better placed as we speak. Therefore, I think numbers should be better off. The earnings estimates based on GST rationalization expectations in terms of the tax cuts that have probably happened for this financial year, what gets announced in the budget in terms of budgetary allocations, as well as green shoots in terms of private capex coming back. I think all of this is hinting that India Inc. should probably have a decent show in the second half and continue at that as we head into the next financial year as well. Albeit, I think what probably happens in terms of geopolitics and inflationary dynamics because of tariff impositions across the globe might just have a tad bit of an impact in terms of a few export-oriented sectors. But for core earnings growth, I think Q3 should be reasonable enough and it should have a structural tailwind for most sectors as we head into the second half of the next financial year, which is good news for the markets because I think the markets basically underperformed. Largely because of earnings not coming through. As they start coming back, and with Indian macros expected to relatively hold up as we speak compared to our emerging and developed pack, I think India has a better chance of standing out compared to the rest of the globe.
Okay. But Mayuresh, in terms of growth figures, last 2 quarters we have seen single-digit earnings growth. Do you expect this quarter to be at least, low double-digit growth, if not mid double-digit growth?
Yeah, I think that seems to be the base case scenario. I think a 10-12% growth is something that is not ruled out for this quarter. And as things structurally improve, as I said, both on the macro and the micro front, a base case scenario of a 12 to 14% earnings growth is getting pegged in for the next 6 quarters. So yeah, I think it's a good scenario that we're probably building up from low single digits heading towards low double digits and probably improving thereof as we head into the second half and the next financial year. I think that's a good risk reward scenario as far as earnings is concerned for the Indian markets.
Okay. Mayuresh, but from a sectoral perspective, what are you watching out for December quarter? Because last quarter, clearly it was the oil and gas and metals that took the leadership. Do you expect this to remain the same, or are you seeing a change?
So I think metals will continue, Lavisha, because you've seen base metal prices actually zoom up for in the last few weeks, last few months as well. So metals will still continue having the tailwind of reasonable earnings growth. Selective BFSI should continue doing well. You've seen decent updates come through on that front. Select consumer discretionary because of the GST rationalization. And though this quarter will be a quarter where I think there will be some inventory rationalization happening as well for a lot of companies which are exposed to the GST tariffs, I think it should be a relatively better show and better commentaries as we head into Q4. Select NBFCs, the large leadership ones, should continue doing well. Infra stroke engineering, select stocks within that pack, including capital good companies, including a few cement companies, should have a reasonable show as well going forward. Large cap IT might just languish a tad bit. Mid cap might actually have a better showing as we speak. And the markets are probably looking at realty as a sector where a large part of those moves are done and numbers are probably getting imbibed as we speak when we head into Q3.
Okay. But Mayuresh, you were talking about IT sector, which is expected to report a muted quarter. But of course, it's a seasonally weak quarter. But I mean, every investor had been looking at the sector because they believe that there is certain risk-reward ratio which is turned favorable towards the sector. Do you believe that even despite the muted Q3, they can watch out for a longer-term horizon in terms of valuation comfort going ahead?
So large cap IT definitely has that, Lavisha, but what probably goes through is how numbers will play out. You're absolutely right. It's a seasonally weak quarter, a lot of furloughs, lesser billing days, but commentaries also are going to be extremely important. How are they looking at the macro environment as far as the key market, that is the US market, is concerned? Has the tariff imposition caused any point of pain in terms of order wins or pricing for that matter? How do they probably balance out in terms of competing with AI platforms, which are probably shaping up across the rest of the globe as we speak? And therefore, I think a lot of things to probably ponder at. Relatively, I think mid-cap IT, though a tad bit expensive compared to the standard deviation mean averages over the last 5 years compared to large cap, have better commentary surrounding all these factors. And therefore, selectively, mid-cap IT, in my opinion, can still continue doing well, even if it's a tad bit expensive compared to the large cap IT stocks.
Okay, all right. Mid-cap IT is something that you're positive on. But amongst the metals, what are you more bullish on? Is it the ferrous names or the non-ferrous names? Because the non-ferrous names have done quite well and they have some pricing support as well. But the ferrous names could see a little bit of a margin pressure because of the rising coking coal prices. So, I mean, what does the Q3 hold? And of course, what would you choose amongst the two?
So base metals have had their run. They might continue doing well because of supply shortages that is happening and demand expected to remain stable. And therefore, proxies like a Hin Copper, Hin Zinc have done well with copper prices, zinc prices, silver prices actually moving at all-time high levels as we speak. But again, I think the safeguard duty imposition that the government imposed a few days back should also start benefiting ferrous stocks incrementally as we speak. And therefore, I think the average price realization should improve. Utilization levels should start picking up with the measures that the government has adopted, whether it's HRC, CRC, coated steel. I think the entire steel or the ferrous value chain should probably benefit to a large extent. And as these aspects start playing out, operating leverage starts getting played out on a lot of balance sheets, where EBITDA and reported EBITDA per ton should improve as we head into the next quarter. So Q3 might be reasonable because it was a recent announcement, but Q4 might be relatively better. And therefore, I think as a balancing act, I think ferrous players should probably do a tad bit better as we head into the next quarter compared to the base metals.
Okay, all right. All right, but coming from, apart from metals, any other sectors that you're watching out for? And in terms of, because consumption was one of the sector that after the GST cut took big headlines that the second half would hold quite better. But amongst the consumption theme, anything that you're liking in a segment wise?
So FMCG is something that selectively we continue liking. Our sense is that it might be a quarter where rationalization happens for inventory, where prices need to get adjusted in Q3 on the old prices and how do they adjust that old inventory with the new inventory post GST cuts. But largely volume growth should start coming back. As volumes start coming back, a large part of the move in terms of operating cash flows should start improving, and therefore selective FMCG stocks should continue doing well. Domestic apparel makers is something that would continue doing well. As discretionary spending patterns improve across the length and breadth of the country, my own expectation is that the kind of MSP increases that one looks at in terms of cash crops, you're going to head into the budget session as well. And therefore, I think that can be incrementally positive with more discretionary spends happening from urban and semi-urban as well as rural India. Aiding these players as well. And therefore, our own sense is that when you probably start looking at the bottom of the value chain and start moving higher, consumer discretionary should have a better impact in terms of the initial leg of GST rationalization, followed by consumer durables. And therefore, consumer discretionary in select subsegments might actually start catching up very, very strongly Q3, Q4 over the next few quarters as well.
Okay, got it. Birish, I mean, yesterday we did see capital good names came under the limelight on the back of the reports that suggested that government might be considering, scrapping the rules about Chinese firms re-entering and bidding for the government contracts. What would you say going ahead? I mean, what kind of an earnings impact can we see if it indeed the proposal goes through, and what lies ahead?
No, so it will be at the end of the day competitive bidding, right? So I think our firms will be bidding competitively, even if a scenario like this takes place. And therefore, I think it's a sentimental reaction that the stocks gave yesterday. But good leadership stocks will always have these inherent tailwinds between them, competitive bids. They probably know their entire management team, strategic teams probably know how to bid, what is the right price point, as an example, and how does it affect their overall IRRs if they bid too low or bid too high. And therefore, I think I'm not too perturbed with this piece of news. I think ultimately, I think it's going to be more strategic in nature, where I think the management teams and good leadership teams always prevail in these situations. So just reading this with a pinch of salt, not too perturbed.
Okay. Virish, any sector that you remain cautious or on the sidelines for the time being?
So I think large cap IT relatively should, how the commentaries come out is something to be watched out for. Base metals, in my opinion, has done a large part of the price move. So I think being very aggressive on base metal stocks at this juncture, where a lot of stocks look extended, in our opinion, should probably be avoided. Numbers will, as I said, still be reasonable, but I think it's getting priced in to a large extent. A few of the large private banks, I think how deposit growth is expected to take place is going to be very interesting, because that is ultimately going to map the overall trajectory in terms of earnings growth on a DuPont analysis basis. And therefore, I think these three sectors is something where I would keep a close watch on in terms of how things are shaping.
Okay, all right. Those are the sectors that we need to watch out for. And of course, we'll be watching out how the Q3 season unfolds going ahead. But on that note, we have to let you go, Mayuresh. But thank you so much for your time and joining us.
Thank you so much. Always a pleasure.
All right, let's see how the markets have been faring, because so far the day has been quite dull for the benchmark index, because they have been quite flattish in the trade. Nifty still clinging on to that 25,850 mark as of now. It's still seen a bit of a recovery from the day's low, but still at the flat point today. Sensex too seeing a decline of about 151 points. All in all, it's a very quiet day for the markets. No major triggers. Of course, all eyes will be on the December quarter results. And of course, over the weekend itself, given how the geopolitical tensions is expected to unfold, how the US Supreme Court is going to rule on the legality of the tariffs. And of course, we have the US jobs data to further amplify the action itself. But yes, for now, no major triggers. So if you look at the small cap and mid cap index, both of them have been sulking in the trade. From a sectoral point of view, it has been the IT stocks which has taken a breather as of now ahead of the December quarter results. But other than that, be it your PSU, be it your realty stocks or even auto or even the financial names, they have been under pressure. So yes, we'll watch out how the second half of the session pans out and whether it would be a fifth day of consecutive loss for the Nifty 50 or whether we could see a rebound from here is something that we'll be tracking as of now. But for now, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3 o'clock for closing, and we'll understand how the market is developed with our experts, which will be lined up in the show. And we'll be also discussing some of the individual stock movers of the day. But until then, signing off, and do stay tuned to moneycontrol.com. Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lavisha Darad. And definitely you can see that the fall has continued and Nifty has breached below that 25,700 mark itself. And of course, it's seen a fall of about 200 points, so to say. Sensex 2 has declined by about nearly 700 points. So while we did start the day on a flat note, but we have managed to see a very sharp sell-off in today's trading session as well. Now, every day of this week, Nifty has seen a decline, and with that, this week itself, Nifty has seen a fall of about 2.5% itself. Sensex 2 has seen a decline of about more than 2.5% this week, so that makes both of the benchmark indices down for the fifth trading session itself. Now, what is done well today and for this week is your, plenty of stocks and, sectoral reactions have been that, right now we are seeing a red across the board. Even the IT stocks that were trying to hold in the green succumb to certain selling pressure. If you look at the Nifty IT index, still flat, but with a positive bias as of now. But yes, it's been a red yesterday also, and today also it looks like a red across the screen itself. Now, even for this week, IT index has seen a decline of about 1% itself, and this would be the third straight week when the IT sector has seen a third straight decline. But yes, from next week onwards, we'll be getting more large cap numbers, which will be getting reflected from the December quarter earnings. So we'll understand whether or not we can see certain reprieve for the sector itself. But yes, other than that, metals continue to see the decline, and for this week, it has registered about 3% fall itself. Oil and gas too remains one of the worst sectoral performers this week, although today it's marginally in the green, but still for this week it's down by sharply by about 6% itself. On the flip side, defense stocks have done quite well this week, and Nifty Defense Index has managed to still see good greens in today's trading session, and of course for this week itself, and they have emerged as the best sectoral performer. But yes, coming to the top gainers and losers, or where we stand on the Nifty 50 front, you can see Asian Paints doing well, 1.5% gains coming in from there. Bharat Electronics with about 1% gains, ONGC, HCL Tech, some of the other gainers on the Nifty 50. However, on the losing end, you can take a look at Adani Enterprises seeing a fall of about 2%, NTPC also seeing a decline of about 2% itself, ICICI Bank, Bharat Airtel and Jio Financial, some of the other losers on the Nifty 50 as of now. But yes, to understand how the trade setup looks like for the last 30 minutes of the trade, and of course how the markets are, headed going ahead, I'll quickly go across to Jatin Gedia, a technical research analyst at Mirae Asset Khan, to understand what your trade position should be at this point of time. Jatin, good afternoon. Wishing you a very happy new year. But if you look at the markets, the entire week has seen a pullback. There has been no substantial attempt of recovery from lows also in the last 2 days. Do you think the panic will continue into the next week?
Wishing you and the viewers of Moneycontrol happy 2026. Yes, our Teji Mandi research team believes that in the previous trading session, we did see a breakdown below 25,900, which was the crucial swing low on the Nifty daily charts, and thereafter we have witnessed follow-through selling pressure on the downside. Now, today's price action engulfs the price action of the previous 7 trading weeks. So that's a decisive breakdown on the frontline index. And what we see is this, the Bank Nifty, which was still holding on pretty well, has also given up its gain. So we believe that this broad-based selling pressure in the frontline indices is likely to continue. Yes, we have been down, or the Nifty has been correcting since the last 5 trading sessions. So there could be a possibility of an pullback during the upcoming week. However, we believe that the trend has reversed, and on the downside, we are expecting around 25,330 to 25,300 levels in the case of Nifty. So I believe that there could be a pullback in the upcoming week. However, we believe that it could face selling pressure around that 25,900 mark, 25,950 level. So on the upside, 25,900 remains a crucial resistance now going ahead, and on the downside, we are expecting a drift towards 25,330.
Okay, all right. That's the view coming in for Nifty. But yes, Bank Nifty also continues to see a little bit of a decline today. It has slipped below that 59,500 odd levels. Jatin, coming to you for Bank Nifty Index, any levels that we can watch out next? We did see some provisional figures that rolled out this week in terms of banking updates, but still, Bank Nifty has lost about 1% this week.
Yeah, so overall, Bank Nifty, I believe that was the clearly the outperformer or relative outperformance was seen in Bank Nifty. However, in today's trading session, we are seeing the Bank Nifty close below its 20-day moving average, which was placed around 59,400. So that opens up a few thousand points on the downside. The next crucial level that we are watching out for in the case of Bank Nifty is 58,600, which coincides with the gap area and also a Fibonacci retracement level. So even if there is a pullback in the case of Bank Nifty, I think we should be facing selling pressure around that 59,600 mark and thereafter drifting lower. So the levels for Bank Nifty are 58,600 on the downside. That is the support area. And on the upside, 59,500, 59,600 should act as a crucial resistance.
Okay, all right. That's the view coming in for the Bank Nifty index. So we'll watch out how the index behaves in the upcoming session itself. But yes, let's talk about metal stocks because they have been clearly one of the worst sectoral performers for this week, declined by about 3% this week. Jatin, I mean, do you think this is just a start of a deeper fall given the kind of surge the sector has already seen, or is this just a temporary consolidation for the time being?
Yeah, see, overall, we believe that the metals are due for some consolidation. If I look at the heavyweights of the Nifty Metal Index, that is Tata Steel, it has formed a double top around its previous swing high. If I look at stocks like Hindalco, it has also run up quite a bit. So some amount of pullback or cool off is required. National Aluminium is one stock that is surging in trade today. So it is a mixed bag. So overall, we believe that there is a scope for consolidation in the case of metal pack. And in terms of levels for the Nifty metal, we believe that today it has filled a gap area which it had formed on the 31st of December last year. So we believe that it has reached a crucial support. However, the uptrend might not be starting immediately. So we believe that it could be a range bound or a consolidation for the metal stocks going ahead for the next couple of weeks. So downside seems to be limited and upside also seems to be limited. So range bound price action that we are expecting in the case of Nifty metal and metal stocks.
Okay, all right. Some sideways trend could be possible for the upcoming sessions. That's the view for the Nifty metal index itself. But yes, other than that, we have seen on the flip side, the defense stocks have done quite well. Of course, we have seen certain geopolitical tensions, and even in the global markets, defense stocks have been quite resilient, and so has been the case for the Indian markets as well. Jatin, coming to you, of course, this week, Nifty Defense up for the third straight week itself. Any names are you liking from the space?
Yeah, so overall, we believe that defense could be in a phase of consolidation. Yes, last week, because of this geopolitical situation arising over the weekend, we did see some positive price action in today during this week, and we believe that BEL is one stock which is having a good setup on the upside. There is a scope for the stock for to rise towards 430 to 435 odd levels. So around 4% kind of up move is possible even from current levels. If someone is taking a position at current levels, he should keep a stop loss around 412 for the long position. So BEL is looking attractive from the defense pack.
Okay, BEL, one of your top picks from the defense names. Today also it's one of the top Nifty gainers as of now. All right, let's move on and talk about IT stocks because clearly they have seen a breather this week. But right now, Nifty IT index has been bucking the trend. It's marginally higher with about 0.2% gain as of now. Jatin, how do the charts of TCS, HCL Tech look ahead? Because we have the Q3 numbers which will be rolling out from next week. But for those two, anything that you're liking, and what are the levels that you're tracking for TCS or HCL Tech?
Yeah, so the IT pack, we believe that it could be just a case of, lighting of the positions ahead of the quarterly result announcement. So the trend for the IT stocks has been positive post the bottom it formed in the month of October or late August. So I believe that the IT stocks are in an uptrend post that if I look at the charts of TCS and HCL Tech, both these charts are trading in an upward sloping channel and currently are at the lower end of that upward sloping channel. So I believe that it is around the support. Rest the results are due during the upcoming week, so that could be a trigger. Overall, the trend is still positive for both HCL Tech and Reliance. In terms of levels for TCS, we believe that 3300 to even 3340 is the resistance area, and on the downside, the crucial support is placed at 3150. So we believe that this consolidation phase could last for a couple of more days till the results are out, but overall, the trend is positive for both TCS and HCL Tech.
Okay, TCS and HCL Tech trend looks positive ahead of the earnings. But yes, let's discuss about some of the individual movers of today. We'll first discuss about Adani Enterprises, one of the top Nifty losers, seeing a decline of more than 2%. And it's the second day of consecutive fall for Adani Enterprises. And so far this week also, the stock has seen a sharp decline of about 5%. Jatin, what's your view? Adani Enterprises, does the trend look negative and can we see a further fall ahead for the counter?
See, Adani Enterprise, the overall trend was negative, and since the last few weeks, I can say for the month of December, it was more or less of a consolidation in the range of 2200 to 2300, and that 100-point range has been decisively breached on the downside. So that opens up for a fresh leg of down move in terms of pattern. It has broken down from a bearish flag pattern, so that again suggests that the next leg of the downside has begun. Now, the next crucial support level for Adani Enterprises placed in the range of 1960. So a 200-point kind of a fall is still expected in the case of Adani Enterprise. So the price structure is weak. Fresh breakdown has happened in today's trading session. So we expect the selling pressure to continue in the case of Adani Enterprise.
Okay, the selling pressure is expected to continue about Adani Enterprises. That's the view. But since we discussed about defense stocks as bucking the trend this week, let's also talk about pharma stocks. They have fairly been resilient. Have more than 0.5% gains that came in for the Nifty Pharma Index. And today, however, the index has been down by about nearly 0.8% cut. But what has been doing well, that is the likes of Biocon, Cipla is seeing a bit of a rebound. Dr. Reddy's is doing well, and Divi's Lab is also showing a bit of a buying traction. Jatin, anything that you're liking from this space? Because this week, at least, this was one of the sector that has bucked the otherwise subdued market.
Yeah, so we believe that pharma is one sector that has not witnessed that amount of selling pressure during the week. In fact, some of the pharma names, that is the mid-cap pharma names like Ipca Labs and JB Chemical and Pharma are some of the outperformers or relatively strong stocks that have gained during this week. So we believe that the frontline the pharma names have witnessed some selling pressure. Sun Pharma, Dr. Reddy's, and all these have witnessed some selling pressure. Oro, for that matter, has witnessed some selling pressure. But we believe that the mid-cap pharma names are doing well in this fall. Ipca and JB Chemical and Pharma are doing well. So it's a mixed pack, but we believe that it has more or less managed to, be less falling in this volatile scenario. So, pharma could be one sector that once this market stabilizes, we could see a further up move in these pharma names.
Okay, all right. So some stability in the market is required for its next leg of up move. But yes, let's talk about Manappuram Finance. The stock has been hovering near its day's low level, and this comes after there are certain reports which has been saying that the RBI has raised objections to Bain Capital's plans of acquiring a controlling stake in the company. Right now, you can see that Manappuram Finance is seeing more than 7.5% decline in the counter, and the stock is near at its day's low level itself. Jatin, what's your view for Manappuram Finance? The stock is seeing a sharp breakdown today.
Yeah, so rightly pointed out, and the closing is below its short-term moving averages, that is 20 and 40 day, which was the supporting factor for this stock, and it's decisively closing below that. So the price action is suggesting weakness. On the downside, the next crucial support zone for Manappuram is placed in the range of 268 to 263. So there could be more downside in this stock. The price action definitely is suggesting weakness ahead.
Could be some weakness for this gold financing stock. But yes, let's talk about Power Grid. The stock has been off the day's low level, and given that the company had been declared the successful bidder under the tariff-based competitive bidding system to establish an interstate transmission system, the stock is trying to recover from the day's low. It slipped from the day's high level, but fairly the stock has been volatile throughout the day. Jatin, what's your view? I mean, the stock in general has been quite volatile. It's been hovering between that 258 to 264 odd levels. What can we watch out next here?
Yeah, so since mid-December, this stock has been within this range of 256 to 275 on the upside. So more or less, it is kind of a range bound, and it has been pretty resilient to this fall. However, the trend is still negative, and we could see downward pressure towards the level of 250. So downside from current levels looks a little limited. However, we would wait for a fresh trend reversal or a close above 265, 268 for to consider it to be a buy. So overall trend is still negative. However, downside looks very limited towards 250, 248 max.
Okay, all right, 248. That can be the next support zone for this particular counter. But yes, let's see. Talk about Reliance Industries. The stock has recovered from the day's low level. It's green. It's once again in the green, and a 0.3% gain coming in. Given that this week itself, the stock has fallen over 8% itself. Now, the company is also planning to report its third quarter results next week itself. Jatin, what can we watch out here? I mean, earlier in the day, we did see Jefferies coming out with a positive note, and they believe that, the sharp fall in the counter makes it a good point of accumulation. But what's your view? I mean, is it a good time to buy or mark an entry, or some time to hold for the time being?
Yeah, so technically, we believe that the breakdown that happened on the 6th of January during the week was a decisive breakdown. Now, we believe that the stock is in the process of retracing its rise, which it started from 1380 to 1620 odd levels. Now, the 61.8% retracement level comes at around 1455, 1450 odd levels. And also we have the 200-day moving average placed around 1444. So this is a strong cluster of zone where we believe that the stock could bottom out after this recent fall that we are seeing from the 1620 odd level. So again, the crucial support level or the cluster is 1455 to 1440. We believe that the stock could rebound from these levels. So downside looks limited from current levels, and it's approaching its crucial support level.
Okay, all right. Reaching its crucial support level. That's the view coming in for Reliance Industries. But yes, today one of the top sectoral losers has been your Nifty Realty Index. And the index has seen a decline of about 2% itself. And right now also it's seeing a decline of about 2% itself. And selling pressure was visible across all the real estate counters, Godrej Properties, DLF, Lodha Group. They were among the top laggards as of now. Jatin, for you, Nifty Realty, how does the index look like?
Yeah, so Nifty Realty, we believe that it could be in a phase of bottoming out. During the up moves, we believe that Nifty Realty is one sector despite the RBI rate cut and all the measures to for liquidity infusion, which are positive for the interest rate sensitive sectors like real estate. However, only a few, I can say, prestige estates and to some extent Oberoi has been able to witness some positive price action. However, most of the realty names like Godrej Properties, DLF for that matter, have not been able to start their uptrend. So we believe that it could be in a process of bottoming out. We don't see further decline, or we can say it's significant decline from current levels. In fact, we are seeing signs of a positive divergence being developed in some of these real estate names. So, this could be the climax selling for some of these real estate names, and I wouldn't be a seller at this point. I would be, in fact, looking for a trend reversal signal in some of these stocks and try to go long in these stocks. So, downside is currently on the cards, but no significant downside from current levels.
Okay, no significant downside for the real estate counters. All right, let's move on and talk about one stock in focus. That's your Irida. The stock has been down today with about 3.5% cut that is coming in for the counter. And of course, today the company will be reporting its third quarter results itself. The company has already disclosed some of its key business metrics in a business update itself, where they have mentioned that the loan book has grown by about 27% from last year. Disbursements have seen a strong double-digit growth of about 44.5% during the first 9 months of the year itself. But yes, coming to you, Jatin, the stock has fairly been underperforming. It's down to 5% in the past 5 days. Can we see a further fall, or how are you expecting the trend to pan out?
See, on the daily charts, the trend is still negative in the case of IREDA. In fact, today it is breaching its 20-day moving average, which was placed at 138. So the downside still looks on the cards. On the downside, the next crucial support is placed around 130, 128 odd levels. So price action today has been negative, closing below its 20-day moving average. So weakness is likely to continue. There are no signs of trend reversal as of now. The price action is weak.
Okay, the price action looks weak, and we'll watch out how the Q3 numbers pan out and whether or not that actually changes the trend and, of course, the outlook for the stock going ahead. But yes, let's talk about BHAL. The stock is doing quite well today. 1% gains coming in for the counter, given that the company has won an order worth of about 5,400 crore rupees in Odisha from its joint venture company with Coal India. Jatin, how are you placed on the counter? The stock has been rebounding after a fall. So can this trend stay positive going ahead?
See, in the case of BHAL, we believe that the counter is due for some amount of a pullback after a fairly decent rally from around 210 odd levels to around 300, 310. So a decent up move has already happened in the last 3 to 4 months, I can say, and now the stock is due for some consolidation. Now the crucial support level for the stock BHEL is placed in the range of 258. We believe that there is a Fibonacci support as well as the 200-day moving average, which could act as a strong support for the stock BHEL. So I wouldn't be very positive for this BHEL up move that we have seen in today's trading session. However, once it drops towards this crucial support area, we can expect some rebound or a fresh leg of up move initiating from that level. But currently, it could be range bound to a slightly negative bias for BHEL.
Okay, all right. Range bound to slightly negative bias for BHEL. That's the cue. But let's talk about Gokuldas Exports because the stock has been seeing some respite today after yesterday's sharp fall. Now, the stock has seen a sharp fall of about 30% in the past 2 months itself. Jatin, what's your view? I mean, can we see a further fall? And is this just a temporary respite for the textile major, or what can we watch out next?
No, I believe that the fall could continue because there is no real signs of a trend reversal, and in fact, the stock is breaching well below its weekly support area, which was placed in the range of 670 to 680. So that's a decisive breakdown. If I look at the weekly charts, I could see head and shoulders pattern breakdown in the case of Gokuldas Exports. So the outlook for the short to medium term remains negative. We believe that it has broken down from head and shoulders pattern, which is a fairly decent bearish pattern. From a short to medium term, we are expecting a further downside towards 600 odd levels in the case of Gokuldas Exports.
Okay, all right. 600 can be the next support zone that is for Gokuldas Exports. But yes, let's talk about NHPC. The stock is fairly done well. Right now, the stock has been trading flat with a positive bias, but it's off from the day's high level. It's fallen more than 1% from the day's high level as of now. But yes, we did see an interesting brokerage note that came in by CLSA where they have given a high conviction outperform rating for the counter and a target price of about 117 rupees per share. Now, what CLSA has said that that this year could be a transformative year for the company, and they expect the company's installed capacity to expand by about 64% on a year-on-year basis. EPS are estimated to grow by about 90% over FY25 to 27. But yes, Jatin, coming to you, I mean, how are we placed here? I mean, do you expect further gains ahead, given that it has seen a steady upward trajectory? Right now, it's seeing a bit of a cool off, but how does the trend look like?
Yeah, so rightly pointed out, I believe that yes, it is undergoing a cool off post this rise that we saw from the levels of 76 to around 85 odd levels. So it's doing some bit of consolidation or a cool off. I believe that on the upside, there is a scope for the stock to rise towards 87 to even 89 odd levels from a short term perspective. So I believe that this consolidation phase should be considered something wherein we should look for buying opportunities. If I have to give levels, then I would consider to buy it above 84. So that would be a clear-cut sign that the next leg of up move has started. So 84 level should be kept in mind, and above that we are expecting 87 to 89 from a short-term perspective. The trend is positive in the case of NHPC.
All right, the positive trend could be possible for NHPC. That's the view. But yes, let's discuss about Keystone Realtors. We discussed about Nifty Realty in general, but the company has reported some strong volume growth and softer value metrics in the December quarter. So in Q3, the developer has seen about 13% year-on-year increase in area sold as pre-sales has declined by about 3% and collections have fallen too. But yes, the stock has been down from the past 5 days. Today also, right now, the stock is seeing a decline of about 2%. Jatin, what's your view for Keystone Realtors?
Sorry, I need the symbol, please.
It's Keystone Realtors. Okay, we'll just get back to that. But let's address the market close, because if you look at the Nifty 50 index, it's settled in the red and has slipped below that 25,750 mark as of now. Nearly 170 points decline that is coming in for the benchmark index, more than 0.5% cut coming in for there. And it's, of course, the fifth straight day decline for the Nifty 50 as of now. Sensex is also seeing a sharp decline of about nearly 500 points, more than 0.5% cut coming in for the Sensex as well. Nifty midcap also settling in the red, deep in the red, so to say, nearly 1% decline coming in for the Nifty midcap index too. Bank Nifty also closing with about 400 points downtick, slipping below that 59,300 odd levels as of now. But yes, it's the fifth straight day of the fall, and if you look at the advanced decline ratio, definitely it's weighing heavily towards the declines as of now. So it's starkly in the red, and the market breadth has deteriorated as of now. If you look at the India VIX, that has also seen a spike up with about nearly 3% itself. So of course the markets have been distressed, and there is certain panic mode which is on as of now, given that we have seen certain geopolitical tensions as well. US President Donald Trump threatening with more tariffs if countries continue to purchase the cheap Russian crude oil itself. But yes, all in all, if you look at other sectoral indices, majority of them have closed in the red. Nifty IT index has closed in the green ahead of its third quarter results, nearly 0.4% gain coming in from there. PSU banks have bucked the trend, and oil and gas sector has seen a little bit of a mild uptick. Remember that Nifty oil and gas index has seen a sharp fall this week, and they have been one of the worst sectoral performers this week itself. They've already seen about 6% fall for this week itself. Other than that, you can see Nifty Auto also seeing a decline of about 1%. Nifty FMCG seeing a decline of about nearly 1% itself. Other than that, Nifty Realty Index also, like we were discussing, about 2% fall coming in for the realty basket itself. But yes, let's take a quick check of how the gainers and losers look like on the Nifty 50 front, and what did well and what did not do well as of now. Yesterday we did see that just 5 stocks were there in the Nifty 50 which were advancing, but today the picture is slightly better, with about 15 stocks advancing and 35 stocks declining. Now, what has done well, that is your Asian Paints seeing a gain of about 2%. ONGC has done well with about 2.5% gains. HCL Tech also seeing a gain of about 14 points, nearly 1% gains coming in for there. Bharat Electronics, Dr. Reddy's after yesterday's lull, today once again seeing a gain of about 0.5%. Eternal also doing well. Reliance Industries finally back again in the Nifty 50 gainers list like we were talking about earlier. It's seen a sharp fall for this week itself, nearly 5% fall the index heavyweight has seen. So you can see Reliance Industries back to the Nifty 50 gainers list as of now. But yes, let's take a look at the converse picture of the markets today. Adani Enterprises seeing a sharp fall of about 2.5%. NTPC also not doing well with about 2% decline. Adani Ports, ICICI Bank, Jio Financial, Bajaj Auto, all of them seeing a decline of about 1 to 2% in today's trading session. Yes, let's talk about HDFC Bank, another index heavyweight. Given that today also HDFC Bank has seen a sharp fall of about 0.8% itself. Jatin, coming to you for HDFC Bank, looks like there was no respite this week entirely for HDFC Bank despite Reliance Industries closing in the green, but no good news for HDFC Bank. And what levels should we watch out from here on?
Yeah, so we believe that HDFC Bank is currently trading around that 940, 930 level, or so this is the lower end of the range, which it has been trading since the last August, I suppose. So we believe that it is at a crucial support level. On the downside, we don't see the stock slipping towards more significantly. So 920 is the area around which we have this gap area support as well, which it formed in the month of April last year. So we believe that no significant downside is expected in the case of HDFC Bank. 920 is a very strong support for the stock, and in fact I will be expecting some amount of pullback post this recent decline, because technically it is now extremely oversold, and even in today's trading session we did see some amount of pullback from the lower level. So we are expecting a pullback in the case of HDFC Bank.
All right, that's the view. Nearly 0.8% decline coming in for the counter. But yes, let's discuss about IEX as well, given that the tribunal has concluded the hearing for the day, and it has said that it has heard the plea of IEX seeking a withdrawal of the Central Electricity Regulator Commission's order on the day-ahead market coupling. But yes, today the stock, yesterday we did see that there was a sharp jump in the stock. Today it has declined by sharply with about 7% itself. And the court has deferred the hearing date. And of course, they've said that there is no withdrawal of the coupling order as of now. And ahead of the hearing, the CERC issued a circular stating that the July 2025 order should be treated as a direction and not as an order. So the sentiment has turned quite weak as of now. Jatin, what's your view? I mean, we did see some volatile moves during the week itself and certain uncertainty in terms of the market coupling norms. But in terms of levels, what can we watch out here?
Yeah, so what we saw is that there was a sharp pullback in this counter. However, it failed to surpass the 200-day moving average. Now, the level of that 200-day moving average was around 150, 152 odd levels. And exactly from those levels, we have seen the sharp selling pressure kicking in. Now, the next crucial support for the stock IEX is placed around 131 to 128. So we believe that the price action of today failing to surpass the 200-day moving average and thereby and thereafter witnessing a close below its 20-day moving average is a negative sign for the short term, and it could slip towards 128 to 130 odd levels over the next few trading sessions. So price action is weak.
Okay, price action is weak for IEX. All right. Just one last question before we let you go, Jatin. I mean, we discussed a range of stocks, but anything that you're watching out of in terms of individual movers ahead before we move on with our the earnings season from next week onwards?
So, as I said, that some of the pharma names are looking positive from a short-term perspective. So, one stock that we can recommend is Ipca Labs. So, Ipca Labs has broken out from a triangle consolidation on the upside, and it has closed above its previous swing high. So, for the upcoming week, we can expect the rally to continue towards 1640 to even 1650 odd levels. On the downside, the crucial support is placed around 1500 odd levels. So that's a decent risk reward ratio to enter a long trade even at current levels. So Ipca Labs would be our preferred bet for the upcoming week.
All right, Ipca Labs is something that you're watching out for. And of course, today also the stock has done quite well. All right, on that note, we have to let you go, Jatin. But thank you so much for your time and joining us.
Thank you so much.
All right, clearly the markets have had a disappointing week because if you look at the Nifty 50 index itself, it's seen a fall of about 2.5%. Sensex 2 has seen a fall of greater than 2.5% itself. But with that, both of the index has seen quite a bit of a worst fall. But yes, plenty of factors which triggered the market fall today. First was the Trump's tariff stalemate that continues to cloud the certain trade outlook, and markets since then have been under pressure. Earlier in the week, we did see US President Donald Trump hinting that the tariffs on the countries could be raised if their purchases of Russian crude doesn't end. And also, not only that, but the India-US trade relationship continues to remain in focus because the bilateral trade agreement between India and US has yet to be finalized. Despite the sixth round of negotiations, clearly we haven't reached a final ground. So yes, there has been certain uncertainty on the back of that as well. But yes, today we will be watching out in the evening the US Supreme Court ruling on the legality of the Trump's tariffs. And if indeed the Supreme Court deems it illegal, the US government could be forced to refund nearly $150 billion to about the importing countries. So yes, this is something that we'll be watching out for. But apart from the Supreme Court ruling, we'll also be watching out for the US jobs data, which could further shape the rate action by the Federal Reserve this year itself. But yes, apart from that, we have seen a persistent FII selling, sustained selling by the foreign investors, which has compounded the market's weakness in the past 5 days itself. Yesterday we did see that the FIIs extended their selling streak to about the fourth day. We'll watch out how the numbers pan out today, but given the weakness of the markets, we'll watch out how what the quantum of selling have been in terms of the FII net sell figures. Apart from that, we have also seen the crude oil impact, given that the crude oil prices have finally been back to the 2-week high levels, and they have emerged as another headwind for the Indian equities, particularly given that we have a higher dependence on the crude oil imports, and that's why we could be seeing some negative reaction on the back of that, and certain risk appetite has also been subdued on the back of this itself. But yes, all in all, it has been the geopolitical tensions, certain tariff threats, and of course, we have certain, we have the uncertainty related to the Q3 results, which is actually weighing down the sentiment and keeping the markets directionless as of now. But yes, but to talk more about markets and broadly where we are headed, let me quickly get on board with Anil Rego, who is the founder and fund manager at Right Horizons. Anil, good afternoon and wishing a very happy new year. But if you look at the markets, it has been consolidating for the entire week. We have certain geopolitical tensions where we started off from the weekend itself. Then again, we had US president threatening with tariffs on countries who are still purchasing Russian crude. And then we have this uncertainty which is related to the Q3 earnings season. How are you watching the sentiment, and what is the kind of trade setup would you emphasize on right now?
Yeah, definitely at this point of time, you have a whole lot of headwinds. I think for a long time, we had the tariff news go into background, and that also has come back into the foreground. And I think market is still, waiting and watching to see, how it pans out. Of course, if, again, there's one more increase, that's also not going to help. But I think already at the current phase itself, it has become unviable in most cases wherever the tariffs are higher. So I'm assuming that, we already are seeing the impact as of now. So tariffs is definitely something to sort of wait and watch. Then obviously the geopolitical tensions in Venezuela and its compensating impact on oil prices. I think all of them are sort of coming together, and I think what market is keenly watching for is, how the results come out of most of the key index companies.
Okay, all right. But would that mean that the FIs would be on the on the sideways, given that until and unless the entire geopolitical tensions gets resolved? Because we don't just have the Venezuela tensions, we also have on the other side US Secretary saying, Marco Rubio, that Denmark and US plans to meet next week itself to discuss more about Greenland. So that could be another headwind for the markets going ahead. So do you believe that the current juncture would mean a little bit of a sideways trend for the FI flows itself? They could be a little nervous to make a comeback for the equity markets as of now. And of course, you can see the rupee also once again depreciating today.
Yes, I think the rupee is a reflection of some of the volatility and the geopolitical concerns, as well as the the expected proposed tariff impact on India, right? So I still believe that other than the indirect impact of oil, I think geopolitical tensions are not so much of a concern. I don't think it should be so much for FIs as well. I think what they'll be bothered about is what can be the impact of if oil prices spike from here. So that is one, but I think the bigger one will still be, on the tariff impact on India. I think there was a bit of an expectation that, there will be a trade agreement in place. I think both governments have also come back and mentioned about it, and so there was some expectation there. Now, from this, going a step back, does definitely have its impact. So I think they will be a little bit more concerned about, how the tariff, was pan out. And I think they will also be, waiting and watching for, how the results season sort of pans out. I think a combination of those two, is what they will be waiting out for. But yes, definitely the sentiment would tend to be a little bit of a wait and watch, I think, even if they were ready to sort of come back and start, investing back into India.
Okay, got it. But Anil, I mean, the latest Amphi data, if you look at the equity flows, they have moderated in the month of December. So the complete conviction towards the equities hasn't returned. Do you think that the Q3 results can change things?
Yeah, I think so, because it was festival quarter, right? So to that extent, I'm hoping that the results should be reasonably good. Okay, and especially the consumer-oriented ones, I think the results should see the benefit of the festival season. So that is, I think, lesser of an issue. I think beyond consumer, I think we will have to watch, and especially including the banking side, is private sector banks. I think everybody will be keenly watching, what is happening, likely to happen out there.
Okay, got it. Anil, but if we go and relook at the Amphi data, it's been the month for the flexi caps once again, because instead of parking money on one sector or one theme, investors have once again favored flexi caps as of now. So, what's your view, and do you think the trend is going to remain the same for the upcoming months?
Yes. So coming back to mutual fund flows, I think yes, definitely. At a time like this, people are a little cautious about mid and small because they have also corrected significantly. So I think flexi is some place where possibly some of that would have shifted. I still think the weakness is not as pronounced. But it sort of indicates sentiment is not at its best. Okay, because it's likely that some of these investors also are investing in stocks themselves, and or have invested in some mid caps, and those are showing negative. So there will be some bit of cautious type of sentiment out there. So I think that is definitely something which would be there, but I'm not expecting it to really turn around and change. And because if that happens, is what we should be bothered about. If it's a little bit of a pause for a period of time or a little bit of a going slow, I think it's fine, because they're already contracted SIPs which are sort of winning, and those should give you a bit of a breather. But yes, sentiment is likely to get impacted because of the volatility that retail investors would have seen.
Okay, all right. Anil, what about the small and mid-cap funds? Would this continue to see moderation in the upcoming months, given that the earnings could be a little on a weakish side for them?
Yeah, so I think the earnings growth of the mid caps probably should sustain and maintain. One will like to keenly watch out on the small cap side. In fact, our view was it would not come back, or it's unlikely to come back till possibly this quarter. Okay, so I think that we'll have to sort of wait and watch for. But I see I don't see a slowdown, because relatively to large caps, still mid and small caps, earnings are much stronger. So one needs to see whether it comes off, and personally, our view is that we don't expect that to come off, too much.
Okay, got it. But last month we saw a little bit of a cool off in gold ETF flows, but once again the flows have returned record in December. What are you making of the sentiment, given that the gold prices already are hovering around that record high levels?
Yeah, so I think what happens is, at the first correction, typically, investors are bottom fishing. Okay, till I think where they stop is where there's a sort of a large, correction out there. So I think investors would have been bottom fishing and come back. There was a lot of noise around gold being also overvalued and stuff. So that is something which would have been at the in their perspective. So I think from here we probably see gold also sort of make a comeback. There is also this volatility on the equity side and global concerns. So I think investors also will be looking to see whether they want to hedge their bets by putting some money into gold. So yes, so gold also being looking at geopolitical tensions globally. right, should sort of get a bit of a booster. So from all of those, I think in the short term, you probably can expect inflows also a little bit more into gold. And, while there's all of this uncertainty, you'll probably see gold also do well.
Okay, all right. Coming back to earnings, Anil, which sector are you watching out for December quarter? We'll be first having IT rolling out its numbers, but any sectoral or thematic pocket that you're watching out for this third quarter?
Yeah, so definitely one is watching out for, I think, the banking, like I said. Okay, so one wants to see whether, there is sort of sustaining and maintaining. Especially, I think we'll be sort of keenly watching on the private bank side. I think the consumer-oriented sectors also, like I mentioned, thanks to the festival season, one expects consumption-oriented and discretionary and organized retail to sort of do well. Okay, IT services, etc. We probably, a bit of a neutral view out there. And I think from, the recent news around the potential opening up of, to China, right, is something that I want to, just watch out for, export heavy industries and tariffs, as well as, some of the uh, infrastructure and certain manufacturing companies which could sort of also get impacted by, cheaper movements in from China.
Okay, all right, got it. What about the IT stocks? I mean, the large cap IT names clearly taking a breather before we head to the Q3 results this week. Q3 is usually a seasonally weak quarter, but do you believe that given the kind of valuation comfort everyone was looking for, does that argument still hold going ahead?
I think it will still hold, but the sector did pretty well. So when you see some of this global news and you see, especially with respect to the US, etc., there's always a fear that will there be could something happen with respect to IT? Okay, so that's definitely, where IT and pharma as well are ones to sort of be a little watchful of. But I personally, I don't think that again we should see anything negative with respect to IT, and possibly we should see these coming back, especially because valuations are comfortable, and I just think that it's a little bit of a profit booking as well for investors who also are seeing negative impacts on other sectors, right? So they're saying, okay, let me take some money out and let me be a little cautious out here.
Okay, got it. Any investing strategies that you would say investors to adopt as of now? Because fairly it's a range-bound market. Should they remain on the sidelines or start accumulating at the current levels?
Yeah, so I would do in a phased manner right through this quarter. So, maybe a little bit of a wait and watch for a few days to see, does something escalate around, the trade war especially. And because if that happens, there will be some short-term impact. But I think, assuming that, you go through like maybe a week or so, then I would be sort of closer to the end there. So sometime our expectation is, during this quarter, hopefully we will bottom out. So phased approach is something to look at because it's very difficult to predict when exactly the change happens, right? So, watchful and I think cautiously optimistic is what I would say our views.
Okay, got it, got it. All right, on that note, we have to let you go, Anil, but thank you so much for your time and joining us. Well, that's all we have for this edition of Closing Bell. But yes, Nifty has fallen by about 2.5%. It's the one throughout this week itself. Of course, we have seen one of the biggest weekly declines in the past 4 months itself. And if you look at the market texture, that clearly shows that the advanced decline ratio stands at about 1:4. So, of course, the markets have been on a sideways trend, and it's a risk-off start for this year itself. But yes, we'll be watching out next week how the result season pans out and whether it instills the confidence and some hope in the minds of investors, whether or not there is a sign of earnings growth pickup from the second half of the fiscal year. We'll also be watching out for the US Supreme Court's reaction on the tariff legality of what the US President Trump has imposed on several countries. And also we'll be watching out for the US jobs data like I was talking about earlier. But until then, it's a wrap from me. Thank you for watching and do have a very happy weekend.